Hello everyone. This video is going to cover exercise 1014B, looking at creating a schedule of cost of goods manufactured and sold, and it's from the Learning Objective 10.5 in your book. The information that we're going to be using is for the Flaxman Manufacturing Company from the month of March. So what we've got to do is we're going to look at our raw materials, which are anything that's going to be used to make the company's products that you still have in its raw form. Lumber, metals, paints, chemicals, anything like that. We've then got our work in process inventory, which could be any type of product that is partially completed. And then we've got our finished goods inventory, which is obviously products that are ready for sale. So to start off our schedule, we're going to look at our beginning raw materials inventory. So what did we have for raw materials at the beginning of the month? We had $100,000 worth of raw materials. So that's all we start with. So now we want to know, what did we purchase in raw materials during the month of March? So if we come down and look at this part during March, we purchased $120,000 worth of raw materials. So then we get our raw materials available for use. Well, if we had 100,000, now we have 120,000 added to it. We end up with a total of 220,000 raw materials available for use. Then we need to look at and see, okay, what were my ending raw materials that were available? Well, that would be looking at March 31st. And it looks like we had 60,000 left. So to find out how much we actually used, we know we had 220,000 available. We used 60,000, we had 220 available. We have 60,000 left. So if we subtract those two numbers, we find that we have $160,000 worth of raw materials that we used during the month of March. The other costs we have to look at are your direct labor costs, which they tell you straight out right here. That was $100,000. And then your actual overhead. Now remember, overhead are those indirect costs that you can't necessarily say, well, we used 14 of these or something like that. You can't apply it directly like the raw labor or the raw materials, like how many boards did you use and such. Your overhead costs could be your rental costs for your equipment. They could be utility costs, depreciation, security, indirect materials like glue and nails, things that you're not going to maybe keep track of directly. So those costs, again, they tell us right here, were $63,000 worth. So our total so far that we've got for total manufacturing costs, when we add those three numbers up, is $323,000. I'm going to make that look a little nicer. So now we've got to look at our costs of just the goods manufactured. So we look at our beginning work in progress inventory. So how much did we have in process at the beginning of the month? Well, we had 120,000 in process. So then when we add those two together, we end up with $443,000 for our total work in process inventory. And then we need to find our ending work in process inventory, which is also up here, 145. So that's what we have left. So we take our total manufacturing costs, because those manufacturing costs are what we used to turn raw materials into products. And if we had 120 work in process in inventory at the beginning of the month, and we have 145 at the end of the month, when we subtract those, we should find out that we actually manufactured $298,000 worth of product. So we took all of the inventory, all the raw materials, used our direct labor and our overhead. We got total, and then what was left in your work in process to give us what we actually manufactured. Then we need to look at our beginning finished goods inventory, which is again up here under that March 1st amount. So we had $78,000 worth of finished goods at the beginning of the month. We found that we manufactured $298,000 worth of goods. So total, when we add those up, we get $376,000 worth of goods available for sale. We then look at our ending inventory for finished goods, which is again that 80,000 up there under March 31st. Because if we're subtracting that, because if we still have $80,000 worth of inventory in our finished goods account, that means we haven't sold it. So we have our cost of goods available for sale. We sold 80,000 of it. When we subtract, we get our cost of goods sold of $296,000. And that is problem 1014.